Good morning, everyone, and welcome to today's webinar. My name is Paula McCain. I'm a recovery business advisor for the North Central Texas Small Business Development Center. Today is National Cold Cuts Day, so I have lunch covered. The SBDC is a leading provider of assistance for small businesses. We are grant funded, and because of that, we can bring services to you, such as our webinar series, at no cost. Today's webinar is the Accounting Lifecycle with Stacy Kildall and Bryce Forney. If you would put your questions in the chat room, and they will get to them throughout the presentation. And I just want to say thank you for joining us today, Stacy and Bryce. Welcome.
Thank you.
Thank
for
you very
having
much.
us. We're really excited to be here again.
Absolutely. I am attempting to share. There we go.
There we go.
You got it.
So we're going to start with just a brief introduction about who we are so that you can understand the background that we bring to today's topic. Stacy, what would be relevant for us to know about you?
Well, the most relevant thing is that that's all I do is QuickBooks for work. But I have been using QuickBooks since I believe the first version that I owned myself was desktop. So it was QuickBooks 1999. And I've been using it in various shapes and forms since then. And I own a bookkeeping company in White Lake, Michigan. And I am a member of the Intuit Trainer Writer Network. So I do bookkeeping, payroll, setup, training, that kind of stuff for my clients. And then for Intuit, I do stuff like this, as you do too.
Yes.
Bryce, tell us about you.
Okay, well, my name is Bryce Forney. I am a CPA in the San Francisco Bay Area, and I primarily spend my time preparing tax returns, especially this time of year. So I'm really excited always to talk about QuickBooks and any of its flavors. And this is a really neat topic today because we're talking about the accounting life cycle. And I think for many business owners, they don't really get the broader picture. They're thrown into this because they're told that they need to do accounting and they need this for their tax return. They may not understand the context around it. So so is there anything that you would add to that, Stacy, about the
No, I think
background
that
of today's
the
topic?
only thing that I would add is that, when people first start, they're like, okay, I need to enter a check, I need to create an invoice. And like you said, they don't see kind of the broader picture on how it all comes together. So they're seeing just little pieces, parts, and they don't necessarily know how that all sort of like melds together to create coherent books,
Right.
coherent reporting.
One thing I was going to try to do here is take my video off, and I am not.
Yes, I'm going to do the same.
But I can't find the little click path. That's the problem. Because I'm going to be looking at a different monitor. There are a lot of reasons that it's not important to see me, but
I
don't
think
know
if you
why.
do it up at the top, I think this is what I struggled with last time.
Ah, yeah, well, I'm still struggling.
Okay. Well, while you're doing that, I'll just kind of talk a little bit about what the agenda is. So we're going to talk about the accounting life cycle as a whole today. We're also going to talk about just why it's important to manage your books, make sure that everything is reconciled and that you're balancing everything out. Some best practices as far as like just maintaining the books. I am a firm believer that if you are a small business, you can, and you don't have, crazy volume, you don't have hundreds and hundreds of, transactions and sales every day, that you can pretty much manage your books in less than a half hour a day. And I mean, that's on average, right? So there might be a day where you sit down and you have, quite a lot of invoicing to do, or you have, you know, a lot of bills to pay, and that may take an hour or two. But for the most part, just the day-to-day of it, you can manage in just in minutes, I would say.
True.
Yeah. So if you want to go
I'm
ahead
completely unable to mess with
it's
my
okay. If
video,
you want to
so
go ahead and advance the slide, I can talk
yeah.
while you are
Okay.
still trying to figure that out. So
I've given up. I've given up. So
okay, well, I'll just go ahead and do the slide. So the accounting life
okay.
cycle, it really, like, just to define it, it's really all about, you know, getting the transactions from vendors, sending them to your invoices, collecting all of the transactions, whether that is a paper form or you know, a PDF, and making sure that all of those transactions are recorded, and that they're recorded within that particular accounting period, whether it is a month or a quarter or a year. We want to make sure that those are allocated and posted in the correct date, so that you have accurate records. And so this image kind of gives them, you know, a visual of how it all kind of goes together. And we're going to go through all of these. And then once you kind of get them all balanced or reconciled, you're going to close that out. And by closing that out, really what we mean is we're just done. We're not going to change any of those transactions in any prior period or anything like that. And then any new ones will be created for the new accounting period. Do you got anything else to comment on there?
Well, you know, just the title, because I'm such a literal person, I read this as, you know, I mean, it says the accounting life cycle.
Mm-hmm.
It's really the accounting cycle. I understand we want it to appear animated. It's your life. It's the accounting cycle. So hopefully our goal today is to make this clear so that it's not as much of your life and it does not become a vicious cycle. It just becomes an understandable, regular, recurring process. So with that, we've got a number of tasks that are going to occur, and they occur essentially on different time intervals. So daily, you want to make sure that you have the right balance in the bank account to be able to cover payroll, to be able to cover any checks that are outstanding. And then you're probably going to go in, like I'm really excited every day. When I start my day, I get to go into bank feed, and we're going to show that within QBO, which is QuickBooks Online. We'll be using that acronym today. So there's daily or weekly activity where we're recording transactions that are coming in either through bank feed or through our own source. If you've got a bill that comes in the mail to enter, those are things that we're going to do really regularly. And the reason that we're doing it in the day or in the week is so that you have better information more frequently, that you can look back to last week and get a sense for what the activity, what the results of operations were. Whereas if we wait until, say in the worst example, we wait until the end of the year to do any of the input of the information, you really can't go back and compare activity from one month to another. You can't get a sense for what your cash balance is going to be, other than looking at the bank, which is valuable, but that leaves off any uncleared transactions that are going to come in.
Yeah. And I think doing it when you're not doing it on a regular basis, I just like what I do as a bookkeeper, so I don't do tax, but as a bookkeeper, a lot of my January and February is spent basically doing an entire year's worth of bookkeeping for clients. And I have a few clients that come to me every year, and they come to me in December or January and they say, hey, I need you to do my books for last year. And it is a difficult process. And I keep trying to explain to them, it would actually cost you less if you just hired me on a monthly basis and we were able to manage this, because it's much less stressful. I'm going to charge more because there's going to be a lot more back and forth. It does actually take quite a bit of time to go through and say, and try to get a client or try to get a business owner to remember what this one transaction was from 8 months ago or 11 months ago. It's very, and it can be stressful. And there are times where, that we will, the client doesn't remember what it was, the small business owner doesn't remember what it was. So in that case, we have to make a judgment call as to, well, do you think it was a personal expense? Do you think it was, oh, we got some animation here.
Yeah.
Fancy. Woo-hoo-hoo. And so I think, like you were saying, getting it and doing it on, like an ongoing basis, as opposed to just, waiting and doing it all at once. It doesn't really give you a lot of perspective. Yeah, once you get it done, if you're doing it all at once, you can look back at year over year, but it's much easier to do that. And you can say, what am I doing this quarter versus last quarter? Or, if you're doing it on quarter, you can say, if you're doing it ongoing, you can say, well, what is happening this quarter versus the first quarter of last year or the first quarter of 2 years ago? So you can actually do a lot more comparative reporting. I see you fixed your camera. You got your camera situation.
Yeah, I
Yeah.
did. I realized, well, it doesn't matter what I realized. I finally got it. So the I just want to reiterate what Stacy had mentioned about remembering what happened with the transaction is so critical. It's astonishing to me how difficult it is, just even in my own life, and I'm an accountant, how I look back at a transaction, if I didn't happen to enter it in QBO, how difficult it is to recall what happened a week ago or 2 weeks ago. See a charge and immediately go into like, oh my gosh, wait, is this fraudulent? So that's another reason it's so important to check in regularly with the books.
Exactly. Yes.
So we're going to start with the slice of the pie here about managing the books and talk about the details of what the books management involves. So we had a different layout with the intervals as applied to specific tasks that were mentioned. So here are the intervals as applied to our overall circle of life with accounting. So we've got the daily, weekly stuff. We've got balancing and reconciliation that we do typically monthly. And then we've got some reporting that we do quarterly and annually. So we're going to go through each of these slices. So on essentially a daily basis or a very regular basis that's less than a week. I mean, is that a reasonable goal to set, that somebody should be in at least a few times a week?
Yeah, I would say for sure. As somebody who does this for a
Right.
living, I would say that I try to, for my clients, I have 40 some clients, and I try to update, and at least update their bank feeds, depending on what the scope of work is that I do. The majority of them, I am logging in and managing their books daily, if not, at the very least 3 times a week is what I try to make sure that I get done. So yeah, it
Right.
definitely and that's the thing that I was talking about earlier, where is if you're logging in more frequently, it's it's like what I call Mount St. Laundry theory, is that like you have, like in my old house, we had a laundry chute, and you would put the clothes, because the house was built in the 40s, so you'd put the clothes down the laundry chute in the bathroom, and they'd go into the basement, and then you would forget about them, right? And so once a week, or every how often, you go down in the basement and you've got this hip high pile of laundry, and you're looking at it like, oh my goodness, this is overwhelming, and you kind of really don't know where to start. But then you start picking it apart and you separate it into darks and whites and reds and all that stuff. And so you're basically, it's the same with your books. If you do it in small bites and small doses, it makes it a lot easier. And that's why I generally recommend just take 15 or 20 minutes a day, and just log in and kind of keep things tidy, so you don't end up with the accounting version or the bookkeeping version of Mount St. Laundry.
Yeah, that's a good example and a good evidence to say take 15 or 20 minutes, because that's about all it will take. And
Yeah,
it gets
it really
exponentially
does.
worse. Speaking of exponentially worse, one of the things that's worse about being in California is that we don't have basements. So Mount St. Laundry just ends up, on the floor. So,
Right. Well, we don't have a laundry chute anymore because they're not code. They're against
ah,
ordinance, so they're a fire hazard.
right.
So
Just have to throw it
that
outside.
yeah, I just chuck it out on the deck and just, you know, let the turkeys come and take it away. But yeah, I mean, now it becomes, the Mount St. Laundry is now in the hamper in the bathroom. So,
Mhm. So our main mechanism that we're going to use to record transactions within QBO for most business owners is going to be to go into bank feed, where bank feed is going out on a regular basis and grabbing the transactions from the bank and credit card so that when you're recording them in QBO, you already have the amount. You have some indication about what the transaction was because there's a bank text or bank detail that comes with it, and you also have the date. So those three fields are automatically coming in. And then as you use bank feed, QBO will start to pick up on, oh, so when in this example on the screen, we've got Cal Telephone. When Cal Telephone comes in, the last time uh, that was recorded as utilities. So it will automatically suggest that same account for similar bank detail in the future. So there is a little bit of learning. The more powerful tool to use there is the rule. And we even see a couple of examples on the screen where we're setting up a rule and we're saying, if this bank text comes in to bank feed, I want this vendor assigned and I want this category assigned. So we can actually make it easier for the time that you spend within bank feed to be more effective and just faster at doing the regular data entry.
yeah.
So I don't know if we want to show bank feed in product or if these screenshots are sufficient. What say you, Stacy?
I think well, you're the one driving this. If you want to show it, go for it.
Okay, so if we go into product, we're just in a fake company uh, that was created obviously a long time ago. You can see the dates here. Um, so here we see all of the bank feed items coming in. And what we can do with any given item is click on it, and then we can see all of the details. So here we know that there's not a vendor assigned, so we probably want to, we always want to assign a vendor. And then we want to assign a category. And keep in mind that by default, bank feed will assign a category called uncategorized expense
Yeah.
or uncategorized asset in some cases. So there we want to make
Or
sure in
uncategorized income.
uncategorized income for deposit.
Mm-hmm.
So we want to make sure and assign the appropriate category so that you get information about where your uh, where your money is going within your business. And on the income side, there's a whole separate process in terms of producing invoices and sales receipts. But on the expense side, primarily, we just want to make sure that we have a vendor and then we have a category.
Yep.
That way, once
And
that's
category, I
recorded,
just want to interject
yeah,
here and say that category is going to be an account from your chart of accounts. So there are places in QBO where it refers to them as accounts, and there are some places in QBO that it refers to them as category. And just know that those things are the same thing. So when you click on that category field, it is going to be allow you to choose income, any account from your chart of accounts. Income, expense, asset, liability, whatever.
right. So that's one way where you're waiting for the information to come in through bank feed, and you're using the bank feed tool as a way to get the transactions into the books where they are not in the books before going to bank feed. Another way to use bank feed or an additional uh, component or method is to enter the transactions in advance, maybe using the mobile app when you're right there at point of purchase. You can snap the receipt, you can record, you can assign a vendor, assign a category, get that transaction recorded, and get the receipt attached to the transaction. If that is the case, if that is the primary method of entry, then what we're going to see here in bank feed is this match. It's going to say, oh, this information from the bank agrees with what you have already entered in QBO. So when you match, you just say, yeah, I don't want to add a transaction to the books because it's already in there. I just want this bank information to agree, so that we know it's cleared. And that has a role in reconciliation, which we're going to talk about in the next slice here. So that's how we can record the transactions in the books. For expenses, we also have on the sales side, we're going to be producing invoices or sales receipts, depending on whether you give your customers terms where they're going to pay at a separate time from when you provide the products and services, or sales receipts where you're providing the products and services and at the same time generating the income and collecting payment. So in many cases, businesses will produce an invoice, and that invoice is going to have the information about the customer. It's going to have the information about the products and or services that are being sold. So all of that information gets into QBO. So you can then, by using invoices and sales receipts, you're then going to be able to determine how much of my revenue was generated from a given customer, what types of products and services did this customer purchase. So all of the insights and reporting that we want to get out of QBO, it's valuable to use these forms as the input. If that makes sense. Like it adds a dimension for multiple layers of reporting to do the invoice. Because the alternative would be, like, let's say you are a real estate agent and you get paid out of escrow and you really don't do any kind of analysis about, what customer is buying, what type of house, that sort of thing. You could just, when the deposit comes from the title company, you could just code that to income. You wouldn't even necessarily need to associate a customer with it. And that would be fine for showing total income. But what it would not tell you is whether you're selling single family residences or condos or some other type of living. It would not tell you who your customers are and whether your customers are repeat customers. So there's the more you put in terms of at the sale level, you can get much more out later when it's time to do reporting.
Mm-hmm.
So also on the vendor side, on the money outside, we talked about bank feed, where you're seeing the transactions come in, you're seeing the credit card charges, you're seeing the bank debits, you're seeing the deposits, and you're either matching those or you're adding those directly into QBO. As a sort of, I guess it's an alternate method. If you receive vendor bills where you have some time to pay the vendor, you've already received the product and services, but you've got a week or a couple of weeks to pay the bill, you can use the enter bill, pay bill workflow. So this is, it still works within bank feed, but you're actually entering the bill in advance and then separately going to pay that bill.
Yeah.
The benefit of the enter bill, pay bill workflow is that you then, once you have the bill in the system, then you can look and say, hey, I've got, $5,000 in cash, of extra cash in the bank account. Why don't I go ahead and pay vendors? And you can see all of the list of vendors who need to be paid.
And I like this process too, because if cash flow is an issue, you can look and see in one screen, you can see what is, coming up that's due the soonest, what might be past due. And you can also, I've done this with my clients, with my small business clients so many times over the years, saying, okay, we owe this much to X amount of vendors. Who are we gonna pay in full? Who can we maybe make a partial payment to? And so you can track that. If you have a $10,000 bill, to a vendor for some materials, but you are, still waiting to get paid from the customer for the project, you can actually say, you know what, we're just going to make a partial payment, and then as soon as we get maybe a deposit or paid from the customer for the project, we can pay the balance in full. So you can make choices like that. I just think even if you're not on an accrual-based reporting system, using enter bill, pay bill is really a good tool to help manage cash flow.
And then because the vendor is assigned, you can do the same reporting where you're determining, and we're going to talk about reporting later, but here's it, by inputting these bills, you then get a sense for how much have I spent with this vendor, what types of things am I buying from this vendor. So once we've entered the bill, then the next step is to pay the bill. So this is just showing, we're clicking on plus new, the click path here to choose pay bill. In this case, we've got one bill outstanding, but we could have a number of bills, and then we can prioritize them by amount, due date, vendor name, that sort of thing.
Mm-hmm.
And this to me is one of the most exciting things about QBO. And that's the fact that we can attach, we refer to them, our parlance is source documents. What we're talking about here is receipts and vendor bills. We want to have those attached to the transaction. And the reason that that's important is should the IRS or an auditor or any third party want to see more information, get evidence of the expense transaction, or in some cases income transactions, they're going to be looking for a source document. So the bank statement is part of the picture. You're going to be, or the credit card statement, you're going to be able to see that the expense occurred and a little bit of information about the vendor. But the other part of it is the receipt itself that shows the products and services sold, the date that those were sold, all of those details. So those are the two parts of the equation that are critical in terms of an IRS audit. And really even for your own information, so that you can make sure if you've got another person involved in entering the transactions, that there's a receipt for every transaction. It's a form of validating really the information that you have in the books. So with QBO, whether you're using the mobile app or you're entering transactions within the browser, you can attach 1, 2, 17, however many files you have that evidence 25. I mean, there's a limit in terms of the size of each file. I think it has to be under 25 megabytes or less, but that's pretty generous. So you can attach, or you can put links in here or attach PDFs, JPEGs, any type of file. So the mobile app powers this even more, where you can use the mobile app and just use the camera on your mobile device to shoot the receipt, and that gets that into the attachments area. So we've got the ability to attach transactions, which is really important for IRS compliance, as well as for just validating that we've got all of the details of the transaction embedded within the books. So that's on the entry side. This is, quick overview. We've obviously in other sessions gone very deep into the detailed click paths. This is an overall picture of the cycle of entering transactions, making sure those transactions are complete. And then the next step here is to balance the books. And the most important step here is to reconcile. And when we say reconcile, we accounting professionals use that term a lot, and it may not be intuitively obvious what that is. So what we're doing is we're making sure that every transaction that is in the bank register is exactly the same as it is on the bank statement or credit card statement.
Mhm.
We're making sure that the amounts are the same, that the dates are about the same, and we're also making sure of two things. One is that there are not transactions in the books that didn't happen out at the bank or credit card. And if there are the corollary of that is if there are transactions on the bank statement or on the credit card statement that did not get into the books, we want to make sure and enter those. We want the reconciliation is basically creating a mirror between what we see at the financial institution and what we see in the books.
And the other thing I want to mention is that it is entirely possible that your banks can make mistakes. I just recently had this happen where the bank had an amount that cleared for not the amount of the transaction. It was
Sloppy handwriting on checks,
uh
that can be one.
well, no, what happened was the person that wrote the check, the actual written out number was different than the
Ah.
number that was written.
Mhm.
And so it was supposed to be 1,000. It was handwritten out as 1,000, and it was the number was 10,000.
Oh my gosh.
And so, which is the correct, it was actually a $10,000 check, but it
Right.
cleared for 1,000, and so we had to
Ooh.
contact the bank about that.
Right. It reminds me of that Jerry Seinfeld bit where he talks about how we write the line at the end. You know, you say, and so many cents, and
Right,
no cents, and then you write the line. He says that's so that somebody doesn't write in plus $1 million
right,
in the rest of that
right,
area.
exactly.
So once we have reconciled, the other elements that we want to go over are, is there any accounts receivable? Are there any invoices that are out there that we sent out that have not been paid, that should have been paid? And similarly, if there are bills that are entered where we have money due our vendors and we failed to pay that, or it's going out for some amount of time, you might want to know just to be able to contact the vendor and say, hey, I know that I owe you money. I'm going to pay it, I'll gladly pay you next Tuesday, whatever the
Right,
case is. So we're looking over accounts receivable and accounts payable. We're looking at inventory to determine that what we have in the books is the same as what's out in the store in a retail environment. There's this term, the euphemism they use is shrinkage in the retail world. That means theft, but they don't like to say that.
right.
So you want to compare the books to what is actually on the shelf. And then there's payroll tax payments, and processing payroll itself that you want to make sure that that's accurate. And then finally, as part of the monthly cycle, you may want to prepare an income statement, which in QBO is known as the profit and loss, uh, a balance sheet report to show you what you own and what you owe, and then a statement of cash flows to determine where the cash went, whether it went for operating purposes, investing purposes, or financing. So we talked about reconciliation, and here's just a screenshot of what the process is. So we can go to our gear icon, and then under Tools, choose Reconcile. We have our beginning balance, which is from our last reconciliation. So we're just putting in our ending balance, the ending balance you see on the statement, and then the date of the statement, typically at the end of the month. Once we're in the reconcile, we're checking off all of the transactions that we see on the bank that agree to what we have in the book. So we're creating that mirror. And one of the great things is if you're using BankFeed, then you already have the transactions that are already checked off. One of the functions of using BankFeed is that it's marking that as, oh yeah, this is exactly consistent with what happened at the bank. And that saves you from having to check it off when you actually go into the reconcile screen. But you can see here just we've got a statement that's credit cards, bank statement up here in the upper left. And we're just checking off the items that we see on the statement to make sure they're consistent with what we have in the books. There may be some transactions that are in the books that are not on the statement, and that's okay for a certain period of time if it's just about, it's going to post a few days later. But if you have an item that's in the books that doesn't appear on the statement and hasn't appeared on the statement for like a couple of months, then you want to investigate that. So that's another function of the reconcile, is to give you a heads up about things that you need to research.
Mm-hmm.
And then we also want to look over our accounts receivable and our accounts payable, make sure that our inventory balance that we have in the books is consistent with what we have out on the shelf. So this is just showing how you can get to these reports to compare accounts payable, the amount we owe vendors, and accounts receivable, the amount our customers owe us. And in this case, just at a glance, the accounts receivable looks pretty reasonable. There's nothing that's gone out and hasn't been paid in the 30-day or more. So, and it depends on the terms of your business, of course. Maybe that's a normal thing. If you work with government contracting, for example, it might be, 90 days or even more from the time that you invoice to the time that you get paid. Most businesses are within that 30-day period.
Hopefully.
Mm-hmm. Yeah, but the purpose of this really is, if you're not getting paid, at least you get a heads up and you can have a conversation with the customer about what's going on.
Exactly.
So inventory is another, for businesses that have inventory, it's really important to constantly make sure the books agree to what you have out on the shelf, so that when customers ask for, do you have X number of widgets, you can then look in the system and rely on that. So constantly comparing, you can really do it at any point. There's a physical inventory worksheet that's designed to be printed out and marked up, and then you can go in and make the adjustment. Or you could just pick an item out on the, we in auditing, we go shelf to books, or books to shelf. You can do it either way, either looking at an item in the books and then going out to the shelf to make sure the count is right, or the other way around, where you start at the shelf, do the count, and then go back to the book. So those are the two kind of algorithms around auditing inventory. And then for payroll, most of payroll is handled by the payroll service, but you just want to make sure that any payroll tax payments are handled. And if it's time to process payroll, you want to do that before the deadline, of course. Employees get really ornery if the direct deposit doesn't come in on payday, for good reason. They've got rent payments and mortgage payments coming out later. So then once those monthly tasks are done, you can run and rely on the profit and loss statement and the balance sheet. And the importance of that is, if accounts are not reconciled, if we have not yet confirmed that everything in the books is consistent with what happened at the bank or credit card, then when we run a profit and loss, we really, it's kind of squishy. We really don't know that that's consistent with what happened at the bank. So we reconcile, then we prepare the financial statements. It's like that old Far Side, where the kid's waking up, the sun's coming in the window, and there's a large sign on the wall, and it says, first socks, then shoes. So it's the same way with reconciliation and running reports. So when you're ready to run reports, we can go into our reports area on the left navigation, and then choose profit and loss. And then it's going to bring up, in this case, we're looking at a few years ago. So I guess we want to think positively in pre-pandemic world. So we've got our profit and loss in 2019 here. And now, because we've reconciled, we know that we can rely on this to be I don't want to say trustworthy, but at least consistent with the bank. I mean, I guess it is trustworthy. And then similarly, we can run a balance sheet that'll tell us what our bank balance was as of the date that we've run the balance sheet and what
Mhm.
our accounts receivable was as of that date. And then the statement of cash flows is less frequently run, I think mostly because it's not as well understood, but the
And I
age-old
would
question,
say
yeah,
that a lot of times in QuickBooks, because people are using, sometimes they're using workarounds or they're making QuickBooks maybe do something that it really wasn't designed to do, like they're using it kind of in a different way. I would say that sometimes the statement of cash flow report in QuickBooks doesn't always work really well
true.
because of the way that QuickBooks is being used. I have that situation for a couple clients.
Nonetheless, assuming everything's typical within QBO, what this will do is it'll determine if for a given amount of net income, what was the actual flow of cash? And one of the big questions that comes up with a lot of business owners is, if I made so much money, why do I not have a ton of cash in the bank account?
Yeah.
And the reason is typically covered in financing activities where a business owner will have drawn out cash that was earned or
Or
used
they've
it to
paid
make,
loans
yeah,
or,
loans or tax
you know,
payments.
yeah,
So,
or credit card payments. So that's a very common question. I'm glad that you brought that up is my net income says that I made $10,000. Why do I only have two in the bank? And so that's, I'm glad that you mentioned that.
so that's what the statement of cash flows can do for any business owner. And then finally here we've got if there are payroll tax payments due, or we refer to quarterly income tax payments estimates. They're really not quarterly. It's April, June, September, and January. And the reason there's a lag in there is that politicians, Congress wants you to have cash during election time in November. So that's why there's a payment in September and then another one in January. Yeah, that's true. That's actually why. So
Yep.
in any case, you can do those quarterly or at estimate time. And then, of course, payroll tax and sales tax, those are actually due um, on calendar quarters and in some cases monthly.
Or weekly, depending on
Oh yeah, that's true.
your payroll, how high your, so the higher your payroll is, the more frequently you have to pay your payroll liabilities, your payroll taxes.
And then in order to access payroll, if you're using QuickBooks Online Payroll, in order to get there to see what's going on with payroll tax, we go to taxes on the left navigation and then payroll tax. So we're just showing the click path that goes along with the conceptual accounting cycle. And if you need to pay taxes now, again, with payroll, in almost all cases, the taxes are automatic, but there may be some other local taxes that you actually need to pay. So you would go into this tax center, at least to mark it as paid, even though you're going out to likely the state site or the
Yeah, like
locality.
for me, for my clients that are tracking sales tax in QuickBooks Online, we go into QBO. By we, I mean I go into QBO and I go to the sales tax center. I look and see what is due, and then I make the payment. I go to the state website, I make the payment, and then I record the payment in QuickBooks because there's no direct, unlike if you're using QuickBooks Online Payroll, where Intuit will make the payment for payroll taxes on your behalf. It does not do that in QBO. In QBO, it's simply recording the payment that you have made outside of QuickBooks for sales tax.
And then finally, one of the like the end goal of all of this input is that you can determine the profitability of the company because you can rely on those reports and then determine how you want things to change and how you can make those things change in the direction that you want, whether that's about increasing prices to make sure to maintain profitability or to try to see what customer behavior is. All of those insights are because of the diligent, regular work within QBO. So you can't get that great information out without putting the time and effort in to maintain great books. So that's really a lot of times the end goal of all of this input is lost on business owners. So it's really important to say for any business owner, the most important thing is getting insights out of the books. And that can only result from, really diligent, regular work within. So it's a garbage in, garbage out. Hopefully not. Hopefully the exact opposite of that. But
Exactly.
that's what can happen in the worst case scenario. And then finally, we want, once a period is done, we don't want any modifications to occur to that period. We've already agreed it to the bank. We've done our reconciliation, and we don't want an accident to occur where somebody's entering information, they're not looking at the date up in the upper left. They happen to hit, I don't know, say the Y key that'll make the date the beginning of the year, and then they record a transaction. That's going to mess with prior periods. So there's a function to close the books that offers a warning if a transaction is in that closed period. And then once that's closed out, then the information can go to the tax preparer or be used on the tax return so that you've got a consistent, complete set of books that is not going to change and can be used for tax reporting. And then as you continue through the reports, you just want to look and see if there may be adjustments that need to be made. As a tax preparer, I think of depreciation as something that's typically not recorded by the business owner. It's a function of the tax return. So one of those final changes might be recording depreciation or some other expense that needs to be accrued for insurance or workers' comp or something. So there are management reports within QBO, so it's a little bit, it's a more attractive layout for the reports of the P&L and the balance sheet and the statement of cash flows. So you're welcome to use management reports. They're really the same reports, but you can add and customize and have basically a complete set that's canned in a way. So that would make the period end easier because you could run one set of reports that'll include all of those.
Yeah.
And I talked about closing the books, obviously a little bit out of step here with the slides, but the function is to click on gear icon and then account and settings, and then go to the advanced tab, and that's where that closing date is set. Although in most cases, I think of the closing date as something that I, as a tax preparer, or Stacy as a bookkeeper, would actually input as opposed to the business owner.
Yeah, exactly.
And then, of course, if you have questions that are unclear, that's where you can ask your bookkeeper or tax preparer, what's going on? This is not exactly as I expected it, or why do we spend so much on, I don't know, office paper?
And one of the things about like asking questions is you can create an account in your chart of accounts if you want. I would make it an other expense account and have it and call it Ask My Accountant or Ask My Bookkeeper. And then anything that you're not really sure what to do with, you can just kind of dump it to that account. And then your bookkeeper or your tax preparer can look at it, or maybe they can customize a report or whatever and take a look at it and either fix it for you or tell you what to do with it.
So with that, we have time for any questions that have arisen.
Oh my goodness. Again, just some wonderful experience. I've made a few notes here on the bank feed. uh, it doesn't take long to set up those accounts and the transactions that go to wherever they're supposed to go. And it just automatically dumps into those accounts from
So
the feed.
if you create rules, it will automatically assign based on the rule that you can create. It can automatically assign a name, like a vendor name, and an expense account if you would like. There is another feature that when you have the bank feeds open, you can click on the gear icon, and then there's an option that you can choose. There's like a little baby gear icon. It's like above where the transactions show up, where you can say enable suggested categorization, and it will try to help, QBO will try and help the user by saying, you know, the last time this bank detail came in, you use this vendor and this expense account, and it will try to help you. And so it will make a suggestion, and it's not always great. Sometimes it's perfect, and other times it's just, you know, way off. So you have to make sure that you're really, unless you have rules set up and the rules are being applied, you, if you have that enable suggested categorization turned on, you're going to want to make sure that you're reviewing those closely before you just, you know, add them.
And that is great information. And I wish I had had it instead of everything going to the general ledger. So that was not fun. So I stopped that process altogether. And the Ask My Accountant account
Category.
category, that is fantastic because you can just put all of that information just right there.
Yeah, and I would say if you're going to use that Ask My Accountant or Ask My Bookkeeper account, put as much detail in the memo as you can. If you have any kind of backup or source documents, take a picture, scan it, whatever it is, and attach it so that you know, your accounting professional can see what the transaction is. Like basically give them the source docs for that transaction so that they can review it. We have, as a bookkeeper, we, for each one of our clients, because we're managing the bank feeds for our clients, that's one of the services that we offer. We have an account, it's the Ask My Client account, but we customize it because we have found that when the report is called Ask Richard or Ask Jonathan, we get a much better response than if the report is just Ask My Client. So we will have an, you know, Ask Richard, Ask Jonathan, Ask whomever. And so for any transactions that we are not able to identify, we assign them and put those to the Ask My Client account. And then what we do is we have those reports scheduled to automatically be sent to the client as an Excel attachment twice a month. So, and then they can upload, or they can, you know, I have one client who he prints it out and then he hand writes what each one of the transactions is, and then he takes a picture and then he sends it to me. And if that's the process that works for him, that's fine. We have others who will edit the spreadsheet and send it back. We have some who, if there's just a couple, they'll just reply back to the email and say, this was this and that. So we try and make it as frictionless as possible. So if you are a small business and you're watching this and you are working with a bookkeeper or some kind of accounting professional, that might be something that you could have them do for you and have them send those reports to you as well.
Yeah, ask not what you can do for your, like what your tax professional or bookkeeper can do for you. Ask what you can do for them. It's our approach.
Makes sense. That makes sense. I do want it to be just as clear as possible for my accountant because that way,
Because I mean, in all seriousness, there can be some boomerang that occurs where
yeah.
if the client says, you know, I don't know what this is, categorize it, and like Stacy's bookkeeper, me as a tax professional, we don't have any information either. It's really the business owner is the one and only person who's going to know what, you know, where they inserted their chip or what the transaction was.
Yeah, that is great information. If anyone has any questions, please feel free to just unmute yourself and
I just have a comment, if I could, real quick. First of all, thank you guys again for helping us understand the cycle of the accounting process. I think you really broke it down for us really well for business owners that are first timers. Obviously, you guys are first timers, and this is your first time running through it, but it was amazing, is my point. My question is for everybody else, though, that may be attending this or dropped in late. I just want to let you know, don't worry, it is being recorded. And I put the link in the top for you called the NCT North Central Texas SBDC YouTube channel. And that's where you can go and find Bryce and Stacy and all of our wonderful series that they've been putting out for us to help us keep our books well. So I just wanted to make sure that everybody knew that, because I saw some people drop in, but I think that they got disconnected. And I just wanted to let them know that this is where they can go to catch the parts they may have missed. Okay?
And thank you for
Excellent.
the compliment, Brett. Appreciate it.
Well deserved, both of you.
Thank you.
Yeah, I unfortunately, after y'all's presentations, I am usually comatose for at least 30 minutes because it's just so much information. But it is so good. I can see what mistakes I made and how I could have improved how I was using the tool because it's so powerful. So if there are no other questions, I'm going to just go over here and show you what we have coming up. Okay, next week, y'all are back with QBO SOS. Oh, that's going to be a good one. And then Rebecca Schultz will be talking about financial bookkeeping for business funding needs. We have a continuation of our HR series, Hiring Smart. And then y'all are back again, bank rules in QBO. That's going to be great too. And the hot topic in everywhere on all continents is cryptocurrency. So Rebecca is going to talk about taking the cryptic out of cryptocurrency. That ought to be great. And then on the 22nd as well, building a high quality email list, part 1. So that's going to be great. Just want to remind everybody, if you want to access our Eventbrite page or our SBDC website, you can use that QR code up in the upper right-hand corner. And that's where you can get contact information. You can register for these webinars, schedule an appointment with an advisor, or find other resources that are already out there existing for our small business owners. Just want to, as I stated earlier in the presentation, we are grant funded. But before I go into that, do you guys have any closing remarks?
Well, thank you very much for the ability to present. This is great. It's great to be able to get this information out to business owners, because then, like as you mentioned, there will be less uncertainty as we work with clients.
Yeah.
It'll be wonderful. We really do appreciate your talent, your skill, and just sharing your wisdom with us. We also would like to thank the Small Business Administration, the state of Texas, North Texas SBDC Regional Office in Dallas, and our host college, North Central Texas College. Thank you all for joining us today, and we look forward to seeing you back next week when Stacy and Bryce will present QBO SOS, Avoiding Common Mistakes. Thank you for joining us, and we will go ahead and give you back a minute of your time to use it however you wish, and this is going to end the webinar. Thanks so much. Bye-bye.